Question 1, scenario-based. Michael owns a small business in Tennessee that recently experienced a break-in. The thief stole several pieces of equipment and cash from the register. Michael has a commercial property policy with a crime endorsement. The insurer investigates the claim and discovers that Michael left the store's back door unlocked. The insurer denies his claim based on the unlocked door. Which legal concept is the insurer most likely applying to deny coverage? A. Proximate cause. B. Estoppel. C. Contributory negligence. D. Contract of adhesion. Answer: C. Contributory negligence. Explanation: contributory negligence means that if the policyholder's actions contribute to their own loss, the insurer can deny the claim. Leaving the store's back door unlocked increases the risk of theft, which directly contributed to the loss. Tennessee follows modified comparative negligence, meaning claimants' recovery may be reduced if they are found to be partially at fault. Proximate cause relates to the primary cause of loss, but does not directly address negligence on the part of the insured. Estoppel prevents an insurer from denying coverage if they previously made representations that coverage would apply. Contract of adhesion refers to the non-negotiable nature of insurance contracts, but does not affect claim denial based on negligence. Question 2. Which of the following is an unfair trade practice under Tennessee insurance laws that could result in disciplinary action against an insurance producer? A. Offering a promotional gift valued at $20 for referring a customer to the agency. B. Explaining policy benefits to a client in simple terms to help them understand their coverage. C. Promising a potential client that a specific claim will be paid before the underwriting process is complete. D. Refusing to issue a policy to a high-risk client based on valid underwriting guidelines. Answer: C. Promising a potential client that a specific claim will be paid before the underwriting process is complete. Explanation: unfair trade practices include misrepresentation, false advertising, and twisting. Promising that a claim will be paid without a complete underwriting review constitutes misrepresentation because the producer is providing false or misleading information about the policy's terms. Offering small promotional gifts is generally allowed as long as it does not exceed the state's allowable limit and does not constitute rebating. Explaining policy benefits is an expected duty of an insurance producer and is not considered an unfair practice. Refusing to issue policy based on valid underwriting guidelines is legal and part of producers' discretion to manage risk appropriately. Question 3. Under Tennessee law, how long must an insurance producer maintain client records to comply with state record-keeping regulations? A. 3 years. B. 5 years. C. 6 years. D. 7 years. Answer: B. 5 years. Explanation: Tennessee law requires insurance producers to maintain client records for at least 5 years after the termination of the policy or the completion of a transaction. Proper record keeping ensures compliance with regulatory audits and helps protect the producer from legal disputes. The Tennessee Department of Commerce and Insurance enforces these requirements as part of market conduct examinations to ensure producers meet legal obligations. The other options, 3, 6, and 7 years, are incorrect based on Tennessee-specific regulations. Question 4, scenario-based. Sarah recently purchased a universal life insurance policy from a Tennessee insurance producer. After 2 years, she decides to withdraw some of the accumulated cash value from her policy. However, when she reviews her statement, she notices that the death benefit has decreased after the withdrawal. What is the most likely reason for the decrease in Sarah's death benefit? A. The policy automatically converted to term life insurance policy. B. Withdrawals from the cash value reduce the policy's death benefit unless adjusted by the policyholder. C. The insurer applied surrender charge to the cash value, reducing the death benefit. D. The policy entered the grace period due to missed premium payments. Answer: B. Withdrawals from the cash value reduce the policy's death benefit unless adjusted by the policyholder. Explanation: universal life insurance policies allow policyholders to withdraw from the accumulated cash value. However, unless the policyholder adjusts the death benefit option, any withdrawal will reduce the death benefit accordingly. Option is incorrect because universal life policies do not automatically convert to term policies. Option C is incorrect because surrender charges apply when the policy is fully surrendered, not for partial withdrawals. Option D is incorrect because the scenario does not indicate missed premium payments or policy lapse. Question 5. Which of the following is not a legal requirement for the cancellation of a homeowner's insurance policy in Tennessee? A. The insurer must provide at least 10 days notice for cancellation due to non-payment of premiums. B. The insurer must provide at least 30 days notice for cancellation due to underwriting reasons. C. The policyholder must be given chance to provide additional information to prevent cancellation. D. The insurer must include the reason for cancellation in the notice sent to the policyholder. Answer: C. The policyholder must be given a chance to provide additional information to prevent cancellation. Explanation: Tennessee law requires insurers to provide notice periods before cancelling a policy. For non-payment, insurers must provide 10 days notice, and for underwriting reasons, they must provide 30 days notice. The cancellation notice must clearly state the reason for cancellation. Option C is incorrect because Tennessee law does not require insurers to allow the policyholder to provide additional information to prevent cancellation. Question 6. Under Tennessee law, which of the following practices would be considered rebating and is prohibited for insurance producers? They offering a client a discount on premiums for maintaining a good driving record. B. Providing a small promotional item such as a calendar to clients. C. Agreeing to refund a portion of the producer's commission to the client as an incentive to purchase policy. D. Adjusting the premium rates for policy based on the insured's risk profile. Answer: C. Agreeing to refund a portion of the producer's commission to the client as an incentive to purchase policy. Explanation: Rebating occurs when producer offers client something of value, such as portion of their commission, to induce the purchase of an insurance policy. This is prohibited practice under Tennessee law. Option is not rebating. It reflects risk-based premium adjustments which are legal and appropriate. Option B is allowed as long as the promotional item's value does not exceed the state's limits. Option D is standard underwriting practice and is legal. Question 7. Which of the following types of coverage is not included in a standard Tennessee business owner's policy? BOP. A. Property coverage for the business's physical location. B. Liability coverage for bodily injury and property damage claims. C. Workers' compensation coverage for employees. D. Business interruption coverage to compensate for lost income. Answer: C. Workers' compensation coverage for employees. Explanation: a business owner's policy (BOP) typically includes property coverage, liability coverage, and business interruption coverage. Workers' compensation is a separate policy and is not included in a standard BOP. Employers in Tennessee must purchase workers' compensation insurance separately to comply with state laws. Question 8. Under Tennessee law, which of the following statements about fiduciary responsibilities of insurance producers is true? A. Insurance producers may commingle client funds with their business funds as long as they keep accurate records. B. Insurance producers must hold premiums in a trust capacity and avoid using client funds for personal expenses. C. Fiduciary responsibility applies only to life insurance policies, not property and casualty policies. D. Producers are not required to provide an accounting of client funds unless specifically requested by the client. Answer: B. Insurance producers must hold premiums in a trust capacity and avoid using client funds for personal expenses. Explanation: Fiduciary responsibility means that producers must act in good faith and hold client funds in trust for the benefit of the client. Option is incorrect because commingling client funds with business funds is prohibited. Option C is incorrect because fiduciary responsibility applies to all types of insurance policies, including property and casualty. Option D is incorrect because producers are required to provide an accounting of client funds upon request by the client or regulator. Question 9. Which of the following situations would be considered twisting, which is an unfair trade practice in Tennessee? A. A producer encourages a client to purchase additional coverage for their home. B. A producer convinces a client to replace an existing policy with a new policy that provides significantly better coverage. C. A producer persuades a client to replace an existing policy with a new one by providing misleading information about the old policy. D. A producer suggests a client switch insurers to take advantage of a better premium rate. Answer: C. A producer persuades a client to replace an existing policy with a new one by providing misleading information about the old policy. Explanation: Twisting involves misleading or false statements to induce a policyholder to replace an existing policy with a new one, usually for the producer's financial gain. This practice is prohibited under Tennessee law. Option is not twisting. It's valid recommendation for additional coverage. Option B is not twisting because the new policy provides significantly better coverage. Option D is not twisting as long as the information provided is accurate and truthful. Question 10. Which of the following statements about Tennessee's workers' compensation laws is true? A. All employers in Tennessee must provide workers' compensation coverage regardless of the number of employees. B. Sole proprietors in Tennessee are required to carry workers' compensation coverage for themselves. C. Tennessee requires workers' compensation coverage only for businesses with 5 or more employees except in the construction industry. D. Workers' compensation benefits in Tennessee do not cover medical expenses, only lost wages. Answer. C. Tennessee requires workers' compensation coverage only for businesses with 5 or more employees except in the construction industry. Explanation. Tennessee law requires most employers with 5 or more employees to carry workers' compensation insurance. However, for construction businesses, coverage is mandatory regardless of the number of employees. Option A is incorrect because not all employers are required to carry coverage. Option B is incorrect because sole proprietors are not required to cover themselves, though they may opt in. Option D is incorrect because workers' compensation does cover medical expenses in addition to lost wages. Question 11, scenario-based. John owns a small restaurant in Tennessee. He recently purchased a business owner's policy, BOP, that includes business interruption coverage. After a fire damages his kitchen, the restaurant is forced to close for 2 months. Which of the following would the business interruption coverage in John's BOP likely cover? A. The cost to repair the damaged kitchen equipment. B. John's lost income during the 2-month closure period. C. The cost of new insurance policy after the fire. D. John's legal fees from customer lawsuit. Answer. B. John's lost income during the 2-month closure period. Explanation. Business interruption coverage in BOP typically covers lost income and operating expenses during period when the business is unable to operate due to cover peril, such as fire. Option refers to property damage coverage, not business interruption. Option C is not covered under business interruption insurance. Option D would be covered under liability coverage, not business interruption. Question 12. In Tennessee, how long must an insurance producer retain records of insurance transactions? A. 2 years. B. 3 years. C. 5 years. D. 7 years. Answer. C. 5 years. Explanation. Tennessee law requires that insurance producers retain records of all insurance transactions for at least 5 years from the date of the transaction. This includes applications, policies, and premium payments. Question 13. Which of the following would be considered misrepresentation and unfair trade practice under Tennessee law? A. Offering a client a promotional gift valued at $15. B. Providing truthful information about a competitor's policy. C. Falsely stating that policy includes coverage that it does not provide. D. Recommending additional coverage based on client's risk profile. Answer. C. Falsely stating that a policy includes coverage that it does not provide. Explanation. Misrepresentation occurs when a producer provides false or misleading information about a policy's terms, benefits, or conditions. Options A, B, and D are not considered misrepresentation. Question 14. Under Tennessee law, an insurer must notify the policyholder at least how many days in advance before non-renewing an auto insurance policy? A. 10 days, B. 20 days, C. 30 days, D. 60 days. Answer. C. 30 days. Explanation. Tennessee requires insurers to provide at least 30 days notice before non-renewing an auto insurance policy. Non-payment cancellations require 10 days notice. Question 15, scenario-based. Emily, a Tennessee resident, files a claim under her homeowner's insurance policy after severe storm damages a roof. Her insurer sends an adjuster to assess the damage, but Emily disagrees with the adjuster's estimate. What is Emily's best course of action under Tennessee law? A. Accept the adjuster's estimate and file complaint with the Department of Insurance. B. Hire her own public adjuster to provide second opinion. C. Cancel her policy and find new insurer. D. Refuse to pay her premiums until the claim is resolved. Answer. B. Hire her own public adjuster to provide a second opinion. Explanation. If a policyholder disagrees with the insurer's estimate, they have the right to hire a public adjuster for an independent assessment. Option is not recommended until Emily explores other options. Option C would not resolve her current claim. Option D is not allowed and could result in policy cancellation. Question 16. Which of the following is true about workers' compensation requirements in Tennessee for construction employers? A. Workers' compensation is optional for construction employers. B. Construction employers must provide coverage only if they have 10 or more employees. C. Workers' compensation is required for all construction employers, regardless of the number of employees. D. Sole proprietors are always exempt from workers' compensation requirements. Answer: C. Workers' compensation is required for all construction employers, regardless of the number of employees. Explanation: Tennessee law requires all construction employers to carry workers' compensation insurance, regardless of the number of employees. Non-construction employers must carry workers' compensation only if they have 5 or more employees. Question 17. Which of the following is not a valid reason for an insurer to cancel a personal auto insurance policy in Tennessee? A. The insured failed to pay their premiums. B. The insured committed fraud when applying for the policy. C. The insured was involved in a single minor accident. D. The insured's driver's license was revoked. Answer: C. The insured was involved in a single minor accident. Explanation: Tennessee law prohibits insurers from canceling an auto policy solely due to a single minor accident. Non-payment, fraud, and license revocation are valid reasons for cancellation. Question 18, scenario-based. Michael is an insurance producer in Tennessee. He recently sold a life insurance policy to a client, and after the policy was issued, Michael discovered that he had incorrectly recorded the client's age on the application, which resulted in low premium and the client should have paid. What action will the insurer likely take? A. Cancel the policy and refund the client's premiums. B. Adjust the death benefit to reflect the premium paid. C. Require Michael to pay the difference in premiums. D. Charge the client the difference in premiums retroactively. Answer: B. Adjust the death benefit to reflect the premium paid. Explanation: in cases where an incorrect age is recorded, insurers typically adjust the death benefit to match the premium paid. Question 19. Which of the following types of policies is required to offer uninsured motorist coverage in Tennessee? A. Commercial auto policies only. B. Personal auto policies only. C. Both personal and commercial auto policies. D. Neither personal nor commercial auto policies. Correct answer: C. Both personal and commercial auto policies. Explanation: Tennessee law requires that all auto policies, both personal and commercial, must offer uninsured motorist coverage. Policyholders may reject the coverage in writing. Question 20. In Tennessee, how long does an insured have to file a proof of loss after a covered event? A. 10 days. B. 30 days. C. 60 days. D. 90 days. Answer: D. 90 days. Explanation: in Tennessee, an insured typically has 90 days to file a proof of loss after a covered event. Failure to do so could result in denial of the claim. Question 21. In Tennessee, what is the minimum liability coverage required for bodily injury per person under an auto insurance policy? A. $15,000. B. $25,000. C. $50,000. D. $100,000. Answer: B. $25,000. Explanation: Tennessee requires a minimum of $25,000 in liability coverage for bodily injury per person in an auto accident. The total per accident for bodily injury is $50,000 and $15,000 for property damage. Question 22, scenario-based. Sarah purchased a health insurance policy in Tennessee. After 2 months, she was diagnosed with a pre-existing condition. Her insurer denied coverage for treatment of this condition, citing the pre-existing condition clause in the policy. Under Tennessee law, is this denial valid? A. Yes, because the condition existed before the policy was issued. B. No, because insurers cannot deny claims for pre-existing conditions after a policy is issued. C. Yes, if Sarah failed to disclose the condition on her application. D. No, because Tennessee law requires a 6-month waiting period before denying such claims. Answer: B. No, because insurers cannot deny claims for pre-existing conditions after a policy is issued. Explanation: under the Affordable Care Act and Tennessee regulations, insurers cannot deny coverage for pre-existing conditions once the policy is in effect. Question 23. How often must insurance producers in Tennessee renew their licenses? A. Annually. B. Every 2 years. C. Every 3 years. D. Every 5 years. Answer: B. Every 2 years. Explanation: in Tennessee, insurance producer licenses must be renewed every 2 years. Producers must also meet continuing education requirements. Question 24. Which of the following would not be considered rebating, an illegal practice under Tennessee insurance laws? A. Offering a client a discount on premiums if they purchase a policy. B. Giving a client a $50 gift card as an incentive to purchase a policy. C. Waiving a client's first month's premium to close sale. D. Providing client with educational brochures about insurance products. Answer D. Providing a client with educational brochures about insurance products. Explanation: rebating involves offering unauthorized incentives to induce someone to purchase insurance. Educational materials are not considered a rebate. Question 25. Scenario-based. Mark operates a tree removal service in Tennessee and has workers' compensation insurance. One of his employees is injured on the job and Mark claims the employee was not acting within the scope of employment at the time of the injury. What must the workers' compensation insurer do? A. Deny the claim outright. B. Pay the claim only if the employee proves negligence. C. Investigate the claim to determine whether the injury occurred during work-related activities. D. Require the employee to pay their medical expenses out of pocket. Answer C. Investigate the claim to determine whether the injury occurred during work-related activities. Explanation: insurers must investigate all workers' compensation claims to determine whether the injury occurred within the scope of employment. They cannot deny claim outright without proper investigation. Question 26. Under Tennessee law, how much continuing education C must a licensed insurance producer complete every 2 years? A. 12 hours. B. 15 hours. C. 24 hours. D. 30 hours. Answer C. 24 hours. Explanation: Tennessee requires insurance producers to complete 24 hours of continuing education every 2 years, with 3 of those hours focused on ethics. Question 27. What is the free look period for life insurance policies in Tennessee? A. 10 days. B. 15 days. C. 20 days. D. 30 days. Answer A. 10 days. Explanation: in Tennessee, policyholders have 10 days to review a life insurance policy and cancel it for a full refund if they are not satisfied. Question 28. Scenario-based. Jessica files a claim under her homeowner's insurance policy after windstorm damages her roof. The adjuster determines that the roof was already worn out before the storm. Based on Tennessee law, how should the insurer handle the claim? A. Deny the claim entirely. B. Pay for full replacement of the roof. C. Pay only for the portion of the damage caused by the storm. D. Require Jessica to pay for the full replacement cost. Answer C. Pay only for the portion of the damage caused by the storm. Explanation: insurers in Tennessee are required to cover damages caused by covered perils, but they can reduce the payout if pre-existing wear and tear contributed to the damage. Question 29. Which of the following is required for an insurance adjuster license in Tennessee? A. A bachelor's degree in business or finance. B. Passing licensing exam. C. Minimum of 3 years of experience in insurance. D. Recommendation from an insurance company. Answer B. Passing a licensing exam. Explanation: in Tennessee, individuals must pass a licensing exam to become a licensed insurance adjuster. Other options are not mandatory requirements. Question 30. What is the penalty for an insurance producer in Tennessee who engages in unfair or deceptive practices? A. Suspension of license. B. Revocation of license. C. Monetary fines. D. All of the above. Answer D. All of the above. Explanation: Tennessee law allows the insurance commissioner to impose multiple penalties for unfair or deceptive practices, including license suspension, revocation, and fines.